It's the end of the week and we have the reports in from the markets. They have closed out at extreme high levels, the highest in 2023, and they're now giving off even more buy signals. It's really difficult to talk about this because of how much bullish information and data there is out there, yet the market remains extremely bearish. So let's try and keep our heads about us as these huge bullish signals continue to flood the market, yet they continue to fall on deaf ears. Traders and investors that have been around the traps for a very long time are still missing these signals, and they've missed huge gains to the upside. Not my opinion, just what is actually happening and has happened in the charts of Bitcoin, of the SP, of the Nasdaq, of the stock markets around the world, as many of them have hit new all-time highs. Enough of me yabbering. Let's get on with the end of week update as we continue to look at these massive macro signals in the charts. You take that information away for yourself and digest it however you see fit. If you're allergic to it, I totally understand. But in the process, leave me a like and subscribe to the channel. Let me know in the comment section who you are sharing the content with as well. All right, enough of my big intro here. Let's have a look at what has happened overnight, or for the US guys, what has just happened on your Fridays. US data, unemployment rate. This is more of that economic data that's come through. A little scare here, 3.7%, as previously the unemployment rate was 3.5. But note where it currently sits, still around those mid threes. It has been here before, and yes, we then had a huge spike. Obviously, that was the C-19 pandemic. But I just want to take a quick look back at the lows of the previous cycle. 2002, 2003, before the market went on a pretty decent run to the tops in 2007, or October 2007. The average level here was about 5 or just over 5%, and then it slowly dropped off from that point. So we're still well below the average, even through a bull market run. So it's happened before, and we've seen the unemployment come down over this entire huge bull market that we had for about 10 years. And it looks like we're in that process now. So I don't think there's any too concern with this thing sort of bumping along for a little while. It's more concerning once we get past some of the previous average levels throughout history. But that's the economic data. The main thing we want to look at is the chart. The chart has told us the story all the way through from the lows in October and November of 2022, not the economic data. Remember, we trade the charts to make money. We don't trade the economic data, which is basically what analysts do and post about it on their blog posts, Medium, Twitter. That's what they use it for. It doesn't help us make money like the charts do. At least that's my opinion and my view over the last 15 plus years of actually trading the markets. What we're looking at is Coinbase chart for Bitcoin. We've seen the last 24 hours bump up rather nicely from those $26,000 levels, basically 26,500. Had a nice little pump here. We're still not there yet for the short term. I'm looking for 27,500. This is our key level here for the 50% while we have this top in and while we have that current bottom in. The good news is we've bounced off that level at 26.5 yet again. You can see it was being held up, quick drop down and then a move back above. It's also held the market up through that early stage of this consolidation area before we went on that last little pump. And basically, 26.5 has been that key level for the last few months. So let's see if it continues to hold up here. I've posted many times before about the next key levels between that 24 and around $27,000 level. But for now, in the short term, we've had a turnaround. The week will end in a couple of days, so stay tuned to the channel and I'll do an update on Bitcoin over on Monday. But for now, the key level we're looking out for over the weekend is $27,500. You can see it's been support. It broke down, then resistance, maybe we start to find some support above that. That's going to be good for the short term to then mount another attack at $28,500, which is where it was rejected off from the daily downswing. So really this move to the downside hasn't been anywhere near as severe as the banking crisis collapse. Remember the problems we've had through this drop in the market. We've had the debt ceiling crisis. We've had the unemployment crisis. We've had any other crisis you can throw that way. They are all your macroeconomic walls of worry, problems that continue to circulate the market. If you want more of that, you can obviously follow me on Twitter. And I'm posting about every single macro wall of worry that the market continues to shrug off. Remember, through the early part of May, we had regional US banks, First Republic Bank, other banks in March, FTX collapse, and so on. And this is going to continue in the bull market. But just going back to the short-term stuff, that's your key level. Let's see if we can get there and then get to $28,500. All right, we've got the Nasdaq, the DJI, and the SPY to get through as well. Before I do that, obviously subscribe, like, let me know in the comments where you're sharing it with. And of course, your thoughts on the market today as we see the VIX drop to new important bullish levels that I'm going to get through to in this video as well, once I can get my words right. Going on with the Nasdaq. So I think there's going to be some definite pain ahead for people that are entering late, but pay particular attention. I'm not saying we're going to collapse to new lows. We have to do some sort of correction, some sort of pullback. Those who are making money on the long side as they buy up stocks, maybe they're trading leverage to the upside, they are making some decent profits, and eventually will hit some sort of resistance, an area where they want to take some profits. But take note of what that pullback looks like. Is it going to be a severe pullback like this, or a more shallow pullback like all of the rest of the pullbacks we've seen on the way up? That is the key thing to look at here. The bears 100% guarantee, I can definitely guarantee this, and if we could actually bet on it, that would be fantastic. But essentially, you will hear the bears say, you are wrong, this thing is going to collapse. The thing to note is these key lows, that February and March low, in the case of the Nasdaq and the SPY, the SPX, Dow Jones, because that price is going to tell you whether smart money is buying up at higher prices, or if they are actually selling out saying this pump was way too overhot and the whole market needs to collapse. If that's the case, you have to see these lows get taken out. You have to see October, December, and the March low get taken out. And in the short term, we even have the 50% level here at 13,600 and this little low here that formed at the end of April. There was some worry there about something, and of course from that point the market has skyrocketed. Yes, it's on the back of only a few stocks, but we've talked about this as well. The cream rises to the top. The good stuff rises to the top, pushes the market up. You don't need all 100 stocks. You don't need all 500 stocks of the S&P. You don't need all of them pumping the market to make the market go up. That happens at the end of the market. Sometimes it happens throughout, but typically you're going to see that at the end because everyone's trying to bet on everything. Think about cryptocurrency for a second. You have 20,000 altcoins, not all of them pump at the same time. That happens in an altcoin season, and an altcoin season typically happens at the end of a cycle. Maybe a couple of times, but it's usually at the end of a roughly 4-year period. Usually happens for that last year of that period. We've talked about that many times before on many videos, which I'll continue to update as the cycle progresses, but it's the same thing here. We've got stocks rising. We've got a few good stocks rising, which is pulling the market up because they have bigger market caps. The rest of the stocks, mostly a bunch of crap. We can see over the long term, they trend down over time against the strong ones. That is data, and I'll get to that in future videos as well. So after that, we'll look at some resistance here at about your 15,100 on the Nasdaq. Keep a lookout for this thing going a little parabolic, which it currently is in the process of, but it is an absolute fool's game to try and bet against a rising market. That is where a lot of money is lost trying to short a market that continues to go up. Wait for the signal. Wait for the signal to turn around and tell you that it's time to go down. Those lower highs form. That's the easiest time to make money. Not trying to be a hero shorting this thing going up. And that's what a lot of people are doing. They're getting caught out, and then that keeps pushing the price up because they have to buy to protect their position, and we get a further push up. So I'll move to that upside. I'm watching here. I'm watching in this zone for any sort of correction. We're getting a long way from our trading range that we've had for several months now, and we've broken out of this. So I'm not trying to bet against it right now, but eventually maybe we get a bit of a catch up here and start to fall into alignment with the trading range, which could take us through summer, a bit of a summer lull after we see this final pump into some sort of resistance. Same sort of thing will potentially happen with the Dow Jones, but we've had a nice little bounce off the March low. It's above a critical 50% level, and another even more critical percent, a 50% level, which was the bear market range. There's your all-time high. There is your cycle low in October. There is your 50% level, and the market has now bounced really nicely above that level and closed the week out above that level. Speaking of reasonable bounces and problems that have happened in the market recently, a quick touch on recessions and what's happened in Germany. Germany economy in recession after high prices take tolls, revised figures reveal. Yes, this is from the 26th of May. I'm not going to focus on this too much because I've covered this so many times, and this market, the DAX, the German index here, has hit an all-time high in the last couple of weeks. It hit a fresh new all-time high, the highest price it's ever seen in history. Yes, people jump to, but it's inflation. Yeah, okay. It probably is inflation. The whole lot is inflation. Money's been printed everywhere. But what would you rather do? Hold your cash and and lose it with inflation, or put it into some sort of asset that you feel comfortable with and get that upside potential, get that growth? That's what the whole game is about. Sitting on the sidelines just crying foul like a victim, that's what the bearish channels do. They make money off you while you watch them, listening to the advertising and all that sort of crap. That's what the bearish stuff is. I would be far better off doing a bearish channel because that's what people want to hear right now. They don't want to hear what's actually going on. And in terms of Germany, after that announcement there, so that was in Aussie time, 2 a.m. in the morning here. So it's basically the 25th for the other side of the world. Here is your date of the 25th. Here is your move up, and then we had that little fall from that point. But it was sort of getting known a week earlier, and then it was finally revealed in the news. You know, the word was said. Basically, in terms of a price, if this is what a recession is, I'm not saying it's over. I'm not saying that the price can't come back down. But we've heard recession now. Germany in recession, freak out. UK is going to go into recession too. It is 0.6%. From the fall, from that gap there, and it's starting to make its way back. Look at this huge volume that formed just a couple of days ago, and the market's bounced from that. Let's see, maybe we still need a bit of a correction because this has been a mega move to new all-time highs. We still have a lot of support here for the lower prices on the German market, down at 14,000 and again at 14,500. So there's plenty of room to come back down to reset before another climb. But just note where the news sits and where the price actually sits. Recession, bad words, all this sort of stuff that's really, really bearish. Things may not be going so well in the economy. People aren't spending, but the market is going up. And we are here to make money from the markets. If you're wanting lifeline support about the economy and how bad things are in maybe a local town, that is not what the purpose of what we're doing here. We want to make money from the markets and follow the direction of the markets. All right, 0.6% from that gap, and from the all-time high, 1.7%. If that's a recession, bring on the recessions. All right, the juicy part here, the biggest of them all, and this is going to affect Bitcoin and cryptocurrencies in the coming months, like we've looked at, probably after we get over this summer lull, this little pump, maybe a sideways period into the latter half or through summer of 2023, and then we start to move again towards the end of the year into 2024, 2025. This is going to be highly effective for those markets because we've just reached the bull buy zone for the SP500. We've got to come up with a better name for that, but essentially it's the first stage of looking at the bull market for the VIX and the S&P, the beginning. We've obviously found and had many reasons why the beginning was further back around October of 2022, and as it continued to break out, and then significant lows on the S&P as well. But if you want further evidence of bullish momentum in the market, look no further than a macro quarterly chart of the VIX. Huge signals here. It's a quarterly chart, remember. So all I'm looking at here is when we get these huge spikes, these are bottoms in the VIX. Okay, so they're significant bottoms that have occurred throughout the VIX. We've got data all the way back to 1990, 30 plus years here. It's hit about 36 on the reading here. Nothing that is an exact science on that, but you see a nice spike. Look at this market when it gets back under 17. So you can see the level here. This is at 17. Then what happens? Once it hits a spike, and starts to touch under that level, that's the bull market is on. So we have a range of time to continue to accumulate and for the prices to go up. It's not as soon as it touches this 17 level that we then get a collapse. We can get spikes back up in the VIX, which cause a low in the market, which is exactly what we've looked at for the Nasdaq. There has to be a low coming in because there has to be profit taking and there has to be a consolidation again. The little move down is what will cause the VIX to spike because you'll see it as well in the S&P. You'll see a move down. But once this starts, it goes on for months, if not years. Months, if not years. Here's another spike out, goes again. Spike out, goes again. These don't mean that you're getting a massive new low. They could literally just be this or this. It's all in context of the cycle itself and where the market is at throughout its cycle. Sometimes they are huge dumps. Sometimes they are just extreme moves to the downside within a very low volatile market, low volatility. So we're in the 1, 2, 3, 4, 5, 6, 7, just hitting into that zone now. I'm on a quarterly chart here, going to the S&P. These are those times that it has occurred. You can see that we had the low, and then when that signal, when the VIX dropped back down under 17, this is where these arrows sit. These all represent amazing buy opportunities. Yes, we've talked about buying closer to the low based on log downtrends, based on Gann swings, based on Wyckoff analysis, based on the monthly swing chart, based on timing, based on news events, based on market sentiment. We've got so many other indicators, but I'm just throwing another macro indicator at you because we see this happen time and time again. There's been some amazing buy signals on this, and it looks like it is just getting started. That's the macro. There can be a pullback, and there probably will be for the VIX because 4,300 is a pretty key level that was set back in August of 2022. You can see it on this spike here. So if you get a bit of a pullback, maybe it comes back down to test some of those levels. That's not the point. What we also want to look at is the time range here. So from the 90 drop or the 90 buy area, so that was after the Iraq invasion of Kuwait, the Gulf War, you've got 14 bars. So remember, this is a quarterly chart. 14 times 3, you do the maths, 42 months. How many years is that? Nearly 4 years there. Can you wait 4 years to be buying again? Here we go again. Another buy signal from 1994 up to I guess the top comes in late in 2000. So from 94 to 2000, there's about a 6-year move. You got another buy signal here towards the end of it, 98. So maybe you think we're in this last stage of the bull market, which I happen to think we are. Maybe we only have a couple of years left. But can you wait 2 years on the sideline in the hopes of a major collapse? So it's 2 years to the top. Things will be crazy. Things will be crazy. Then you've got another 2 or 3 years to the bottom. Can you wait 5 years after this buy signal occurs? All right, we have another one here. You got about 4 years from 2003 to the peak in 2007, October to October, and then a dump. So you got 4 years up, 2 years or so down. Can you wait 6 years? You got another buy signal here, another buy signal here. Prices basically don't go below it. So you're not really going to get another buy opportunity. Market goes up for basically 10 years to 2020, and then that COVID dump. You've got these two little buy signals in here, but not really much happened. And then you've got another buy signal. So this is the shortest one that we've had, going up from April to the January peak. So roughly 8 months. So let's say worst case time frame, worst case in any of these signals in the past, 8 months before we had that dump and it came back to those prices where you could rebuy. So maybe we have 8 months, then it comes back to those prices. Can you wait roughly 8 months? Worst case, because this is the shortest time that this signal has shown up before we got to a peak and then a crash. So it was 8 months to the peak. Then you had another 5-6 months into that May and June low, that first low, before the market came back and reached that price of April again. So it's actually over 12 months. But nonetheless, maybe we've got 8 months up from this signal. We've got April. Takes us through to January of 2024. Are you willing to wait that long? And then another 6 months to see the market potentially roll over from that point? Some people are. I personally am not. I've personally been talking about buying at these levels for the stock markets and actually buying Bitcoin at those lows. under 20K because of all of those signals that we've been talking about on the channel, which is a major reason why you should like and subscribe and share the content with a friend. Of course, you can always jump over to Twitter as well, as I've got plenty of content going up over there. Here is your VIX post, so you can go through it and read it in detail. And that leads me to the end of another weekly update. This week has been huge. Pay attention to where these levels are at. Have a look at previous support zones in case this market picks up speed and then needs some time to rest and recover from its massive party to the upside. Have a great weekend, guys. I'll see you at the next video. Until then, peace out.